Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Scott, let's get to it. Q4 did not start out well here. We have S&P treading near bear market territory, hitting new lows for the year. What's the key level of support? How low do we go on this move?
Well, the key level of support was broken yesterday. I don't know how many times we've talked about that 1120 area, that 1120, and if we close below 1101, we're going to hit 1070 in a New York minute. Well, it's been 24 hours, not a New York minute, and we're opening around 1077 below 1080. So everyone's like, how did this happen? You know what? We've been painting the picture and trying to connect the dots. And if you look at the chart of the S&P, you'll see exactly what we're talking about. You know, maneuvering this market is not for the amateur. That's why you want to be a pro. You had two macro patterns, a head and shoulders top, ignited, 1250, get to cash, or even 1300 we talked about. Then you had this lower end of the range, will it hold? You had a high, another lower high, showing that demand was weakening. And then we said you get a break below 1120 or the August 8th lows, you're going to get more downside follow through. And if you go to the weekly chart, the next area to look at really is briefly around 107, which is probably where I'll be covering my shorts. And then 1020 to 1040 is really the next big macro support area where that's going to be a level that longer-term bulls will try and defend.
And we talked about this months ago, dealing with a technical strategist at the S&P, Mark Arbiter, who was calling for 1020, and we both said that's very possible when the fundamentals were actually looking better at that point. It looks like that's a big reality. So would you be shorting then into this down move? You're not covering yet, like you said.
No, I'm going to be covering into this. I think that now's not the time to short. The same way you don't chase excitement at the top. We were at like, what, 1195 last week. We broke 1120 yesterday. We're going to be opening up below 1080. Now's not a time to try and short. Doesn't mean we're at a bottom,
right?
But the oscillators are down minus 51. You know, I've said I was short since Wednesday. We bought those puts, the October 112s, 111, 109. If you did that alongside us, I would say sell some of those puts, book some of those profits, cover some of those spiders, because you want to be in a clear state of mind if we get that real acceleration. And then if we could be buyers from 1050 down to 1020, right, because that's what I want to do. I want to position below 1050. So if I cover a little early, I don't care, but I'll be thinking clearly, watching relative strength, watching the leaders, so I could think and act fast if there's opportunity at those lower levels.
All right, so not time to be brave yet and then go long. You want to wait. But let's go to some stocks that could be making some headlines in a positive way today. That's going to be Apple unveiling its iPhone 5 at a conference. Now, usually, like we talk about, it's a buy the rumor, sell the news kind of thing. Has not worked out. Apple trading below that 375 level. How are you trading it into the conference?
Well, Apple's been showing some technical weakness for the past week or so. We outlined a few different areas of importance when it broke the upper range, didn't hold 400, and then when it gave up its 50-day moving average. So if you look at the chart of Apple, you will see it's not been acting like the strong Apple of itself. It actually broke this upper area, and then this is at 395 we said to get stopped out. Then it broke the 50-day here at 385, and now it's down to 374. I think you have massive support at the 100-day at 364, and then if we really do start cascading lower, you have the 200-day down at 350. But I like the fact that it's sold off into the product announcement.
So we might get a bounce afterwards.
Right, but it might be just an oversold bounce, so you need to measure it. I'm going to be looking to buy Apple. I'll use yesterday's low as a pivot. If that doesn't hold, then I'll use the 100-day on Apple.
All right, now with everything going lower here, we've been talking about how reverse ETFs might be a good way to make extra bang for your buck on the downside. What would be the favorite way of yours to play that?
Well, we talked about so many of them, and you can make money short the market. You're allowed to make money when things go down. Don't feel like guilty of doing something, like you stole something, because you learned how to navigate the market. The banks have been the weakest one. If you take a quick look at the SKF, you will see you could have traded this one to be short the banks. This has had a big move, first move above 65, then again above 85. It's going to highs. And if you wanted to short the S&P, same type of scenario. First buy was around 22.
Would that be chasing the highs, or is that still a good bet?
I think in here was your area. If you look, to be in your tier 1, yesterday was tier 2. Now we're opening probably around 28. You sell one, and that's how you buy in the hole, add for momentum, sell into strength, and that's the way I maneuver the markets.
All right, wrapping up with gold and silver here. Gold, one of the bright spots in the market, but not up huge. Up, $10, $13, not seeing that $50, $70 panic buying, which is probably a good sign for long-term gold charters.
Yeah, I think gold holding above 1,600 is good. I'm not sold that it's going to go above 2,000 like a lot of the big name players out there, especially this quarter. There's too much damage done. But as long as the GLDs stay above this pivot that we were talking about, if it stays above this 160, 161, you could have some upside. But if it starts turning lower here, you could see a move down to the longer term support around 153, or even down to this real big support, and that's probably about 1440 in gold. So don't go all in on gold. Stay tier 1 if that's your long-term thesis. I'm not ready to see momentum there yet.
And as we know, when panic really strikes, it also strikes the gold market. All right, that's it for us for right now. If you want more of Scott's stock picks, check out the entire morning call on the street, and you can check out Scott on Street Signs on CNBC at 2:30.